All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A little bit earlier today, a friend of mine asked me, Jeff, do you trust this move? And I kind of chuckled at it and thought, man, I wish I had a crystal ball, right? It's definitely a nice move, and it's one where I've thought about, do I trust it? Do I trust it? Is it going higher? Is it going to reverse here? It's gone into an area that I kind of have targeted for a reversal, but it's taken a lot longer to get to that area, so the chances of pushing higher are much better. And then I go and look at the metrics, and I say, well, as far as what I'm going to do, that'll be driven by the data, by the metrics, not so much by what I think. And we have a market vibe that has gone to neutral today. We have seen significant improvement in several factors of the market vibe. Now, it's still a -1. But it has improved here today with a lot of the short-term stuff, bouncing. Not uncommon to see that. But then for the challenge, we have 3 bullish triggers on the board. Procter & Gamble, Chipotle Mexican Grill, and JP Morgan. And, I was thinking, okay, what do I do? What do I trade? Do I go after them? Do I not? Do I wait till tomorrow? Looking at option pricing, and the reality is the option prices for Procter & Gamble, JP Morgan, they're good. It's not a matter of, hey, they're overpriced or anything like that. Chipotle Mexican Grill they have earnings after the bell today, so that's not one I can go after. So I'm going to go out and trade. I'm going to go trade Procter & Gamble and JP Morgan. And yeah, I realize, there's some risk associated here, right? It's not a market that you look at and go, well, it's super comfy, buy anything, go. No, not at all. There's definitely some risk, but we have the mechanisms in play to handle that risk, and so going to take the signal as it is and run with it. All right, so let's see here. Let's start off with Procter & Gamble. Let's start off with Procter & Gamble here. And I'll fill in the spreadsheet here in just a little bit, but I'm looking at the 6th of March. 126 calls. 126 calls. Now, we have, for the challenge, we have almost 3,700 in cash here. So let's go out and do, on this, let's go out and do 5 contracts on Procter & Gamble. And let's see here. I'm not going to get cute with the order. I'm just going to put in a market order here. All right, 256 is the fill on 5 contracts, and stock price is 126.21. All right. All right, so that's Procter & Gamble. JP Morgan. All right. Now, this one's interesting. You can see the 6th of March. If you take a look at the implied volatility, the 6th of March has a 22.5% implied volatility. It's about a 1.5 more than 1 week earlier. So with JP Morgan, I am going to go 1 week earlier than the 31-day just because of that implied volatility element. And, I'm going to come here to the first one in the money, the 136s. So this is going to be the 28th of Feb options here. And we're looking at the 136. Now, before I pull the trigger on that, I'm getting a note that the alert hasn't gone out for Procter & Gamble. So let me pause here for just a moment and make sure that everything's good there. I'm being told it's just a little slow. But that was 5 contracts at 256 on the 6th of March. 126 calls here for Procter & Gamble. All right, we're good. All right, great. So let's go out and do J.P. Morgan here, and looking at the 136s for it, the 28th of February, 136 calls, and I'm going to do 5 contracts of this as well. And let's just come in, market order that thing. And 285 is my fill. 285 on 5 contracts here, and the stock price is 136.16. All right, so let me make sure I get the thumbs up on the alert there for that one. And that was JP Morgan. Price was 285 on 5 contracts there for it, and the 28th of February, 136 calls. All right. All right, thumbs up. There we go. Let's so here we go. Let's come fill in our spreadsheet, and let's make sure we get these in. But we have Procter and Gamble, and we have JP Morgan, and let's start with Procter and Gamble. The 6th of March, 126 calls. And let's see, 256 was the entry price on 5 contracts. Stock price was 126.21. Now the ATR here on Procter and Gamble is 156. 156. So that's going to give us our exit and entry levels here. Or our exit and profit levels here. I will go and fill out the rest of it a little bit later here instead of holding up the video for that. So let's just get some of the basic data in here for it. We'll be good to go. There we go. All right, and then JP Morgan, we're 2:04 p.m. here on these, 2:04 p.m. JP Morgan is the 28th of Feb. Right, 28th of Feb. Option price 285 on 5 contracts, 136.16. And the ATR on JP Morgan, I wrote that down here. The ATR is 236. All right, so 236. And so there we go. So we put just a little bit more into JP Morgan. Now you'll notice I didn't put the full amounts into both. It did leave us enough for another position. And that's why I did that. It's not a risk thing. It's not I don't trust it or anything else. No, it's the signal. I'm going to go with it and run. It's about, hey, you know what? There's some other things that could signal very soon out there. So I do want to be in position to be able to react to them, if and when they come. So there we are. Into Procter & Gamble, into JP Morgan, off and rolling here. And, yeah. So looking for some nice moves or some nice upward trends to evolve in each of those. Look, I'm not under any illusion that the market is done with some of its volatility or anything like that. But as I mentioned, we have seen nice uptick in some of the market vibe elements here. If we look at the crossovers, let me pull them up here for us. The bearish crossovers, we have GLD and GOLD, neither triggered. I thought that GOLD would have a chance, but it has simply rallied too much. And the thing with GOLD, the probability of moving 2 average true ranges lower is pretty low. On the upside crossovers, the list is the same as it was this morning. Almost all the same stocks. Bank of America's creeped in here. I think, yeah, it was on this morning, but pretty much all the same names, here with it. You can see Dollar General. I thought Dollar General would trigger, but it hasn't, here with the move today. That said, really like the chart. But, that's, one of those where, if it were to have triggered, I probably would go after it. But anyway, not a trigger here for us today. And then Chipotle, which is a nice trigger, but does have earnings after the bell, so significant risk factor, here with that. Okay. The market moving up here today, and it's moving up pretty big, right? And if we take a look historically, the biggest rallies happen in more bear market type of situations, right? And it's not uncommon after a big rally like this to see some pullback or something like that. And I would not be surprised to see it. That said, we could zoom off into new highs. And one of the things about today's market, and when you look at the bounce, that's very different from the other bounces that we saw, right? We saw a bounce right here last week, right? This little bounce. And then we saw the bounce, on Thursday. And then we saw Monday's bounce. Monday's bounce had some substance to it in terms of some positive elements. In fact, I made the comment yesterday that had China not stepped in, we may be looking at a market down 50 points. But what did we see? We saw China step in. Now, not only did they step in Sunday night, but they stepped in last night too, and injected significant liquidity into the markets. We've seen central banks do that many times. It's one of those things where what happens afterwards, it's very up in the air. We have seen big rallies happen after. We have seen, some cratering after, with it. A few days after the flash crash or 2 days after the flash crash, China injected a huge amount in, and it supported the market for about 4 days before it fell off. But we see China doing that here right now. And then we have the economic data, which, we talked about yesterday, and the ISM, much better than expected. We saw the global PMI number last night that came in sharper than expected and showing growth. Actually showing growth there. Then we had a stronger than expected factory orders number here this morning. Helping to support the, some of the move here. I find some of the articles interesting, and some of the commentary very interesting about the political situation here in the U.S. And, look, I'm not a very political guy, as far as who's president, as far as Democrat, Republican, one has one mascot, the other has another. I'm not very polarized when it comes to politics. Yes, I have some of my core beliefs and tendencies, but, you don't ever hear me on video talking politically for many reasons, mostly because it bores me. But I understand it's a big factor, and it's a factor that from time to time really drives the market. And one of the things that, the markets understand and fund managers understand is that U.S. President Trump is pro-markets. He's pro-markets, and he has incentive to push markets higher. We've talked about this for years now. And that is something that the Democrats don't necessarily have, right? And it is something when you look at the Democratic candidates, they don't talk about pushing the market higher, right? When you look at President Trump, he specifically speaks to it. So if the markets see that the Democrat's going to get elected, that's going to create some uncertainty. If President Trump gets elected, that gives a little bit of calm that, hey, there's another brace under the market. Not only do you have central banks, but you have the politics, helping to push things higher. And, with some of the political stuff last night, it was commented by several very influential or very intelligent market people that, hey, it looks like the Democrats don't stand a chance in the upcoming presidential election. Now, I don't know whether that's true or not. I know what the numbers say. I know what the polls say. I know what the polls said before last election and how wrong they were. So it's one of those where, for me, I understand, yes, market's higher. But, if we see more information like that coming out, it's only going to push markets higher. That does have to get priced in. Is there an element of that that's already priced in? I do believe so, but we can't really measure it. But ultimately, the markets will continue some of their, their bullishness the more it gets to be, or the more certain it is that President Trump will get elected, and the markets will turn in reverse and go about face the more that, it's kind of hinted that Democrats will be elected, whoever emerges as the major candidate there. So you have an economic, you have a political, and you have a central bank element pushing on the upside of this market, and that is different than any of the bounces we have had so far. That's different than some of the bounces we had back here in August or October, and that's a rather substantial some substantial underlyings there. Now, can the coronavirus wipe all that out? Can some of the data that comes out tonight show a different way, and you see the market go about phase? Yeah, all that could happen, right? But as far as where it sits right now, that's what we are. That's what we are seeing. Seeing out there. All right. So, in on Procter and Gamble, J.P. Morgan. We'll run with those. Do have enough cash for another position here. What about 1,100? No. 1,000 for another position. Okay, 1,000 there for another position. Should we get a trigger, and we'll go from there. Thanks for hopping on. Have yourselves a fantastic evening. And we'll talk to you later. Take care.